Well, the Reserve Bank has raised the cash reserve ratio by 75 basis points. This is against an expectation of 50 basis points. A 75 basis point hike is what the Reserve Bank has done with the CRR. The hike will be in two phases, one in the fortnight beginning the 13th of February, the second in the fortnight beginning the 27th of February. In all, about 36,000 crores to get sucked out from the banking system. On the repo rate, the central bank has left that rate untouched. The repo rate has been left untouched. Inflation, which was forecast at 6.5% for the year when it put out its October policy, has been raised to 8.5%. And again, the positive news really coming out of this is that the GDP forecast for the financial year, which was pegged at 6% with an upside bias in October, has now been revised to as high as 7.5%. So these are essentially the big numbers coming out from the Reserve Bank of India. Again, on the credit growth front, it has toned down its expectation of credit growth from what was 18% earlier, now down to 16%. Credit growth already running at 14% growth. So that credit growth revision has been, credit growth forecast has really been revised downwards. Deposit growth has been revised downwards from 18% down to 17%, and money supply has again been toned down from 17% down to 16.5%. So essentially, these are the big numbers coming out. The central bank also highlighting the need for monetary exit and fiscal exit to coincide with each other, that the two need to go hand in hand, that any sort of monetary tightening from here on will be ineffective if the fiscal stimulus is not withdrawn in a transitory manner.